Dudley Antiques Limited is a company that has been trading as an antique dealer since its incorporation in 1998. The company occupies a shop in Southwold on a short leasehold tenancy.
What are your thoughts, please?
So it's a trading company that's been trading for a really long time. And then about the
Does the
short lease,
1998 tell you anything?
I'm not sure.
It's not too relevant.
Yeah.
Well, yeah, it just depends, but it's goodwill. Pre-2002 would be capital. So I'm talking about intangible
2002 would
fixed
be what,
assets.
sorry?
It'd be capital. So disposal of goodwill would be treated as capital, but if it's post-2002,
Yeah.
it'll be under the intangible fixed assets regime, treated as a trading gain or loss.
Okay. The
Good
company's
stuff.
sole shareholder and director, Angela Dudley, is 58 years old and has decided to dispose of her business and retire. The base cost of her shares is £50,000. So here I'm thinking potential business asset disposal relief because she's disposing of her whole, it's a material disposal of her business.
Excellent. Good.
Yeah, it's a trading company. She's an employer and it's been trading for more than 2 years.
Excellent. Very good. And the base cost, so effectively the proceeds, less base cost of 50,000.
To give us capital gains.
Yeah. Good. And then we'll check to see if BADR is available. Excellent. Can you please?
Angela has found a potential purchaser who is flexible on the arrangements for structuring the acquisition of a business. So up-to-date financial information has been obtained on the assets and liabilities of the business. So we've got fixed assets of a lease, fixtures and fittings and office equipment. We've got stock, trade debtors, cash, trade creditors and corporation tax and goodwill. So
no cost for goodwill.
Yeah, no cost. An offer
has found a potential purchaser who is flexible on the arrangements of structuring the acquisition of a business. So when you're purchasing, you're either purchasing shares or trade an asset. Continue, please.
Okay. So an offer of £600,000 has been made for the trading assets. Alternatively, the purchasing company is willing to acquire the entire share capital of Dudley Limited for £500,000. The amounts offered are non-negotiable.
Okay, what are your thoughts, please?
I mean, looking at it, it seems like they've been offered more for the trading assets than they are for the shares. But obviously, there must be something that makes one better than the other, but I'm not sure what.
Where's the offer for the shares? Oh, yeah, sorry.
Yeah, 500,000.
500,000, exactly, yeah, good. So they're offering more for the trade and assets rather than for the shares. Generally speaking, what you need to understand and consider is so there's 4 angles you can look at.
Okay.
The first 2 relate to the seller, so in this case Angela.
Yeah.
And the second 2 relate to the purchaser, which is who's buying. Okay, they haven't mentioned the purchaser.
No.
So the purchaser, 2 angles. So the first angle, I said, is seller, Angela. If she sells, what are the implications if she sells the shares? What are the implications if she sells the trade and asset? If she sells the shares, she's simply disposing of her shares in a company. She'll get business asset disposal relief, hopefully, and that's the end of it. Okay? Yeah. And the purchaser then takes the company and does what he wants.
Yeah.
If she sells the trade and asset, meaning Dudley Antiques Limited will be selling the trade and assets, right? Yeah. She just owns the shares. But as sole director and shareholder, she'll make the decision to sell the trade and assets, means that she'll sell the fixtures and fittings, the office equipment, the lease. Everything will be sold for, and the cash will be given to the company. So effectively, when she sells, proceeds less base cost gives you gain. the company will be subject to 19% chargeable gain, and then the cash will remain in the company, and then she needs to then extract the cash by way of dividend or salary or capital distribution. So can you see the double tax charge?
Yeah.
There's a chargeable gain at 19%, and then income tax when she needs to extract the cash. So that's why for her as a seller, generally it's better to sell the shares. Okay, generally it's better to sell the shares. But the issue lies when you're looking at it from the angle of the purchaser, because it's the opposite in the sense that the purchaser would prefer to purchase trade and assets rather than shares. Why? Because if they purchase the shares, they are literally purchasing the shares in Dudley Antiques Limited. They are purchasing a dirty company, meaning they have to keep up with the history of the company, the liabilities, the warranties, the disputes. So that's why they would prefer to purchase the trade and assets. When you purchase the trade and assets, you simply continue the business fresh. You set up a new company, you purchase the trade and assets through the new company, and you're starting fresh. Okay. Any questions?
Not yet.
Okay, excellent. Let's continue then, please.
The landlord of the South Wall shop has agreed that the lease can be assigned by Dudley Antiques Limited, no premium paid for the lease.
Okay, so assigned means disposed and no premium was paid. We'll come back to that.
Okay. The company has capital losses of £5,000 brought forward, nil balances on the special rate and main capital allowances pool. So they can potentially use those capital losses.
The company can, right?
The company can, yeah, not Angela herself.
Excellent.
And then I'm not sure about capital allowances, but that might fall into the disposal of the trade assets, so she may be able to claim capital allowances.
Yep, agreed. We'll do some calculations shortly.
Yeah.
But that's exactly what you meant to be considering. Good.
So Angela is considering providing valuation consultancy services to local antique dealers in Yorkshire and may also occasionally sell antique items through an online marketplace. Angela satisfies the conditions of the ownership of shares in a personal company and has not previously claimed business asset disposal relief.
Okay, what are your thoughts on these two paragraphs, please?
I mean, if she's not previously claimed business asset disposal relief, then she's got that full amount available to use for herself.
Correct, the full 1 million.
Yeah,
good.
But about her getting a new job, I'm not sure.
Okay, so basically what it is the targeted anti-avoidance rules, which is the Phoenixing rules. So if she was to sell the trade and assets, we said she'll need to extract the cash somehow from the company, and she'll ideally want to do that by way of capital distribution. Please explain the difference between income distribution and capital distribution, please.
Oh, God. I'm not sure what difference it would make with capital distribution.
Okay, so let's just say I've sold all my assets. Okay.
Yeah.
I have a company. I've sold all my assets, and the total proceeds for all my assets is £1 million.
Yeah.
Okay. That £1 million sits in the company. How can I extract this £1 million?
Yeah.
Income distribution, I can take a salary of £1 million. However, that would be very silly because you're paying 47% tax.
Yeah.
So then the other income distribution would be by way of dividend, which will be better than salary, and you'll pay 38.1%. So you're still paying high amount of tax.
Yeah.
The best method would be to go via a formal liquidation, and then you can potentially get the capital treatment. So the 1 million will effectively be treated as a capital distribution subject to capital gains tax rate. And then if BADR is available, you're only paying 10%. So do you see the massive tax saving?
Yes, yep.
So the massive tax saving from potentially 47% as salary, which is 45% plus 2% NIC, against 10%. Now, there's phoenixing rules in place whereby if you, within 2 years, you start the same or similar trade, then HMRC will not allow the capital distribution. They'll turn it back into an income distribution. So, selling antique items is the same as what she does already. If she starts a new business, there'll be an issue. However, at the same time, because she's coming close to retirement age, she might just be doing that as a hobby. So you can discuss, you can say, maybe the targeted anti-avoidance rules may be looked at. However, so-and-so may say that the reason or the intention behind it is not for tax avoidance purposes.
Okay. Angela has no capital losses and has used her annual exemption for 2021 and 2022. And then on retirement, Angela's taxable income will be covered by her personal allowance. Angela has reached her personal lifetime allowance limit for pension contributions. Okay, so she has no annual exemption left, no, still has her personal allowance, but no personal lifetime allowance for any pension contributions that she has or gives.
Yeah, exactly. So income covered by personal allowance and pension contributions have been the limit has been reached. Okay, so that's fine. Discuss the tax issues with regard to the disposal of Angela's business. Let me make a few comments. Sale of shares in Dudley. So we'll start with this angle. We will say it simply be proceeds less base cost equals gain, which is, in my calculation, is the 500,000 proceeds for the share capital less the 50,000 base cost gives you 450,000 gain. Okay.
Yep.
She has used annual exemption, so no annual exemption and no capital losses. So it simply be, and then you say at 10%, and you'll explain BADR conditions being satisfied.
Okay.
So just explain again, please, briefly, why is BADR available?
So she's worked at the company for more than, well, I'm assuming she holds a 5% shareholding.
Yeah, so it does say somewhere, right? It says personal company, so therefore, she owns 5%.
She's an employee there, and she's held the shares for more than 2 years, and it's a trading company.
Excellent. And the lifetime limit is available.
Yes, because she's not used BADR before. So that 1 million lifetime limit is all available for her.
Exactly. So you'd explain that in your answer. And then what else can we really say? Thinking. I think the only other thing we can say is it'll be due 450K, 45,000 due 31st Jan following end of tax year. We can move on to the purchase of trade and assets. So we say sale of trade and assets. So we say something like double tax charge. Explain how, because when you sell the assets, the company will be subject to 19% on chargeable gain. Then she will need to extract the cash from the company. Now, this is where you say will either an income distribution or capital. Income would be dividends, but capital preferred, and then claim BADR. However, HMRC may invoke targeted anti-avoidance rules. Because she may start the same or similar trade within 2 years. Okay. So what does that do? That turns the capital back into an income distribution, so you don't get the tax saving.
Okay.
The other condition that needs to be satisfied is that the reason for liquidation was for the purpose of tax avoidance. However, argue against this. So we're saying that she's coming, for example, coming close to retirement age.
Right. Okay.
And the other thing will just be a hobby.
Okay.
Okay.
Yep.
So that's the explanation of sale of trade and assets. And then you do an actual calculation because we've got all the figures. So let's go in order. Let's say there's something about the lease. So the lease will be assigned. So £10,000 current market value. Balance sheet value is 10,000. So therefore, we have a chargeable gain of 10,000. So we have sale of trade and assets. So we have assignment of lease, 10,000, base cost 0, gain 10,000, and we can use the capital loss brought forward.
Okay. 5,000, yep.
So that would be 5,000. Capital loss brought forward minus 5,000 gives you £5,000. The other assets are fixtures and fittings, 15 and 6, and 2 and 1. So technically, it says something about tax return value. Nil. Okay, so 0 tax return value. 0.
Yeah.
But proceeds will actually be the 7,000, 6,000 plus 1,000.
Yeah. Okay.
Yeah, 7,000. So capital allowances will be 7,000. Okay. Income or loss for CT purposes. So these are both chargeable to corporation tax and 19%. Which other item do we have? We have stock. So 120,000 will be treated as sold, 480,000.
The base cost was 60,000.
120,000. Trade debtors, we have a loss of 1,000. What else do we have? Goodwill, 400,000. That'll be, yeah. Goodwill will be 400,000.
So we already
all
look
these
at what's actually being sold rather than. So that whole cash, trade creditors, and things like that, we kind of leave out. Their liabilities, aren't
Yeah.
they?
Exactly. Exactly. So we'll need to settle them regardless.
Right.
And even trade debtors you'd sort of ignore, but because they're saying the value has gone down,
Yeah.
it's some sort of irrecoverable debt.
Okay.
So it'll reduce your profits by 1,000. Okay. Auto sum. So this amount is subject to corporation tax at 19%. 0.19. And then after, yeah, so that's what we're trying to say. 108.90. So we have other liabilities of 80,000 plus now our new 108.90. We'll do 80,000.
You know the capital allowances, wouldn't that be a deduction?
No, because so this is a charge. Why? Because our tax written down value is nil, but our market value is 7,000.
Right. Okay. So we've got sold it less than what we bought it for, or?
Well, we've claimed capital allowances on the full amount, and now we are simply disposing of it. Therefore, the balance is a charge.
Okay, makes sense.
So it's a charge this time.
Okay.
And then effectively, you'll have your and then that's when you'll explain the capital distribution. So they're going to pay 600,000 less all your liabilities. So 600,000. This is minus. So available for distribution will be 419 or 110, and then that's where you'll try to get your capital distribution at 10%. BADO will be available.
Okay.
Okay. Yeah. So does that make sense?
Yeah.
So and then you just continue to explain the anti-avoidance, and you can do a potential a comparative calculation as to what is more beneficial. But generally speaking, you'll explain everything else in the text of your answer, which is all this.
Okay. Right, okay, that's fine.
Any questions?
That's all right. What I might do is I might go over that question and then...
Yeah, if you go over the question and honestly speaking, try to type, so it's a 15-mark question.
Yeah.
Give yourself 30 minutes, do the best you can, do everything we've covered, and add more wherever you can as well.
Okay.
And see how you get on. Yeah, okay. It'll be good.